The MIW Disruptive podcast is sponsored by Mentorch. Mentorch is a social development network for mentorship. Go to mentorch.app to seek knowledge and leave a legacy.
Welcome to the Disruptive podcast by Minority Innovation Weekend. Minority Innovation Weekend is a weekend summit dedicated to aiding minority innovators launch tech-focused startups, exploring emerging technologies, and showcasing tech startups that have a minority founder or co-founder. During each episode, we will discuss innovation, news about tech startup, as well as the startup ecosystem, and interview people of color throughout the startup ecosystem. So welcome to the MIW Disruptive Podcast, hosted by Michelle, Sir Walter, and Jerome. Today we got a special guest. Yes, he is a founding team member at Prologis Ventures, which is the venture arm of the world's largest industrial real estate owner. He's not only that, he's also the founding board member of Black VC, a community built for and by investors. He's now an associate partner at GreatPoint Ventures. I'm talking about Ernest Sweat. How you doing?
I'm good. Can I just hire you to have me around all the time?
Isn't he great?
Jerome, that was great. Like, that was better than when I was in high school and, maybe was in the starting lineup a few times. That was better than that. So I feel pumped now.
Good. Bring that energy to the conversation. So Ernest, so excited to have you a part of this conversation. You and I had the opportunity to connect a couple of weeks ago. I reached out to Ernest to learn about his experience in venture and how he got into the venture capital space, which it's still such an elite space, right? It's such a space where money is controlled by a certain kind of community, and slowly it is being diversified. But would love to hear a little bit about your background and what interested you in the space and how you got into the VC space.
Yes, great question. And first of all, thanks guys for having me. What you're creating and the content you're providing so essential. And if you look at just progress from, within a family, within a community, within, just humans, it's from transferring. And you guys are doing that through your platform. So I appreciate it. So my background, I don't want to go too far back in the origin story, but I would like to say that I'm born and raised in Little Rock, Arkansas. And that's really the foundation that growing up in that, lower middle class 2-parent household really had the impact that, and the foundation for me to really succeed in industries that I had no idea existed, and like venture capital. But I would say everything, the through line between me and my sister, of how we pick careers is really from our parents. And so my mother is a high school science teacher, and my father is both a computer programmer. He worked for a state agency in the state of Arkansas called the Workforce Development Agency. And he is also a full-time pastor. So if you look at their career choices, it's always been about learning, inspiring, and how can you use your talents not only to help you and your family, but also how can you equip others with skills and tools to build their own future. And starting from that point, that's kind of what's led me to go outside of comfort zones and go into industries when a lot of times people say, no one looks like you, or you don't come from the right schools or something like that. That's what always has led me to say, no, I can figure things out. But, quickly, the schooling was lucky enough my hoop dreams didn't really come to fruition, unfortunately. even though I was a pretty good hooper in high school. But I had a brain on me and was lucky enough to go to Columbia for undergrad. And so that was really like the first life-changing experience, because I got to see actually how the world works. And yes, you have to have hard work, but it's a lot about relationships, and exposure. And I was able to get all things really almost more outside of the classroom than inside the classroom. And so did investment banking because of that. Started my career in 2007, so you all know how that kind of went. But luckily, it's a great Canadian firm where I had a job for a long time. And then that really propelled me to think about entrepreneurship. And that's where I got my first glimpse of what venture capital was. And so for me, someone who had went to Wall Street, did equity research, but knew that wasn't for me, was inspired by entrepreneurship, but then realized that like maybe I was the right person to lead a company, but got enamored by my angels that invested in my company, and tried to seek out, okay, what do they do? This can be a job. And so that's kind of like the early signs of me thinking about venture capital as a career.
I'm gonna take it back. I'm actually from Memphis, so not too far from Little Rock, Memphis,
Oh
Tennessee.
yeah,
Yeah.
yeah.
So when did you first hear about venture capital? The first I could tell you the first time I heard about it, I was watching this movie called Wedding Crashers,
Yeah.
and there's a scene with Vince Vaughn. He's like, "This is our cover. We're gonna be venture capitalists from New Hampshire, I think."
Yeah. That's I watched that movie a ton, and that's not what I got from it. I guess I was more into like the shenanigans that they were doing at the movies, at the weddings, and so I totally missed that because I have a lot of other friends who say that was their first time really understanding what venture capital was. For me, I didn't really learn about it until I was entering business school, and and it's actually funny enough hearing about it through, I went through the MLT program, was their pre-MBA program. And so you meet a lot, maybe 200 other individuals that are Black or Latinx who are interested in going into getting an MBA. And so there were a few of us in that would say they want to go to venture capital. And that was the first time it kind of like, was like, oh, this is something you can do. But even at that time, I was like, oh, people who say they want to go into venture capital, it's like me saying I want to go to the NBA at 35 now. It's just like there aren't jobs in it. You don't really want a job. Like you guys are having some crazy dreams. But it changed for me in business school. And so thinking about the angels of me before I went to business school, trying to start this like ed tech company. And I didn't even consider them really angels. It was people I was raising money for something. But then looking back at that experience saying, oh, this can actually be a career. And through divine intervention, I actually got an internship in venture capital. And it was very unorthodox during my years in business school, because I honestly tried to get a consulting internship, because a lot of people kind of like in business school, when you can't think of what you want to do, it's like, oh, I'll just be a consultant. And that was the approach I was going to take. And I got 6, and the reason I say it's divine intervention, I got 6 final rounds for my summer internship and didn't get 1 offer. And so I was kind of like, all right, now I have to think of a plan. I definitely need to work. And I found this program at Kellogg that was, you could work abroad in India for either a social enterprise or a impact venture capital fund. And I chose the latter. And that's when it really opened my eyes that the skills that I developed in equity research were a lot similar to what I would be doing in venture capital. But I would have a lot less information. And so then it was like, okay, now I have the bug. This was a great experience. How do I do this for the rest of my life? And so then I came back after that experience thinking, okay, I can do this, but maybe it's a long-term view. And so that's what really pushed me to even want to move to San Francisco after business school.
Gotcha. So, so how does someone know that they're ready to work in the VC arena?
Uh, that's a good question. You know, readiness is relative, and if you look at a lot of our communities, like people that come from our communities, we're taught to be 100%, 110% better than our colleagues, right? To get noticed. And it's we're taught this very merit-driven approach. Well, that's not always the case. Um, I can confidently say we will be good enough even if we're 80% ready or 60%, because we're thoughtful in how we approach things. We know how to make a lot out of a little, and we're we're natural entrepreneurs. And so I think if you believe that if you enjoy, you know, talking to entrepreneurs, taking a lot of nebulous concepts and constructing a thesis that's also flexible, but gives you focus, I think venture would be great for you. It's not a career where you're going to get just like you're going to just get standardized training. Like when I went to investment banking, it was like, okay, you go take this training and you'll know how to do these specific types of models. You're going to do all your learning on the job. So you need to have that approach even before you get the job. And so I tell a lot of aspiring VCs that, have a good understanding of what stage you invest in, what types of investments you want to invest in, and develop that network now. So what entrepreneurs do you know within that stage and that industry focus? What investors do you know between that stage and that industry focus? And what's your perspective? So I always push people to create investment theses before. And it's not always about being right. If you look at the industry, like we have this mentality of like swinging for the fences. So a lot of times you're not going to be right on investments. So you're probably not always going to be right with kind of like your thesis of where things are going, but that's okay. People want to understand what's your thought process. How do you think? How do you make decisions? Because you're going to have to do it on the job immediately.
So one of the things I'd love for you to talk a little bit about are the different stages of investment, right? You have friends and family, you have seed, you have Series A, Series B. Can you share a little bit more about that process? What companies who are looking for outside funding, what kind of benchmarks they should be hitting? And then I think one of the things I'd love to also hear about, I was listening to a podcast this past week of the founder of Supergoop. I don't know if you're familiar. It's a sunscreen now distributed in Sephora. And so the founder of this company, her first friends and family raise was $25,000 check that her dad gave her. Her second raise was a $750 check that her brother gave her. And so that is not realistic for most communities of color or most marginalized communities. And so can you talk about, I don't know if you've seen innovative ways to do friends and family raises or other ways to like raise capital?
Yeah. To your first, I'll do that the second part later, but to your first question, I think it's essential for first-time founders, especially of color, represented founders, to seek out like education. And it's our responsibility. My industry hasn't done that great of a job of also providing that education and translation, because it's a very different business. A lot of us come from communities where when we think of entrepreneurship, we think of salons, we think of tax offices, we think of supermarkets, we think of small businesses that have driven the American economy for the longest, really, and it really makes our country special. But it's a different approach to how much you raise and taking outside capital. And so I've seen first-time founders of color make pitches, And their approach is typically from that lens. And given that I understand that lens, then I try to help them out on ways to improve their pitch to this audience. Venture capital isn't for every type of business, and it's not for every type of founder. And when I mean type, like personality type, do you want to own 100% of what you built, or do you want to own 10% of what you build at the end? And having that distinction and being understanding yourself is key on what you want to do, because you do lose some control when you are take out outside capital. The next piece is understanding kind of like what stage you're at and what investors you're speaking with. So, I'm from Little Rock, Arkansas. Southeast investors are going to have a different perspective of what a seed round should look like or a pre-seed round should look like than a West Coast. And it's because of a number of things and types of businesses, or just like what investors are accustomed to. So having your understanding of when you're talking to different investors, what their kind of expectations, what's been their track record, and what they look for is something that you should try to seek out. So if you can talk to founders that you're about to pitch to one of their investors, you can get some insight from that. And when it comes to creative ways to raise, this is actually something I've been thinking about a lot, especially given the current climate. And even at Black VC, we've been internally speaking about that gap for friends and family is key. And I wish I had the statistics in front of me, but I was talking to another investor that was speaking about they were doing a survey with serial entrepreneurs and saying what's the most likely use of capital, like source of capital. And what would rank mostly would be, now remember, this is like serial entrepreneurs, is personal savings was number one. Then like friends, then venture capital. And that speaks a lot about the industry, or obviously those people, that's a self-selected group that also has had some amount of success from going up. I mean, a better indicator would have been like their first experience. What were those rankings? But I'm trying to think of ways in which I know that we don't have as strong of angel network that we probably could have. When I think of all the successful doctors, lawyers, general businessmen that are of color. And so maybe it's some education there and connecting to those people. Or, a lot of pre-seed firms have started to emerge, like Precursor Ventures and others that are making that an institutionalized asset class that is filling the gap for people that generally don't have the friends and family resources to get a company off the ground.
So this is a conversation. We actually had this person who's a friend of the MIW a while back, McCleaver Conwell, who is with TEDCO, which is basically a Maryland-based independent organization focused on like research, entrepreneurs, and startups. And so he was tackling that exact kind of challenge. Like when we don't have, like, I don't think I could ever go to my mom and ask her for $50,000 to start anything, even if I was in a life or death situation, right? Like much less for a business or a venture. So one of the things that they did is they created a seed portfolio that focused and kind of tackled that exact thing, especially for underrepresented communities. Like how do we provide that critical funding, especially at that stage where capital can be a make or break point. And so I was kind of interested to see someone who's like living and breathing in kind of Mecca of San Francisco, if you had seen any other innovative ways, even if it's like through public-private partnerships.
Yeah, I mean, I think those are emerging more. I've also seen friends in non kind of like Bay Area ecosystems really bootstrap their company from pitch competitions.
That's
And
right.
get pretty far from that way, or partnerships with, the local city, the Chamber of Commerce, having competitions or non-dilutive capital, or even, large corporates in their communities. So there are ways to get around it. I also think that, and I'll challenge myself from time to time on this, is do we ask enough of our own networks? And I don't mean just of our communities, but our school affiliations, our professors, our alumni, like anybody we have any connection to, our hometowns. Like, do we ask enough for them, and be okay with getting a million no's, or I don't know, but turning every stone to see if something's there. So, because I've kind of questioned myself on that too, because I think there's opportunity there. And maybe people aren't even aware of what you're doing, but would be interested or know someone who would be interested in investing.
Ernest, from your perspective, what's the big difference between an angel investor and a venture capitalist?
Yeah, good question. When I think of angels, I think of like Shark Tank, which has made really the idea of the venture capitalists and investors in private companies more mainstream. Hence why I think we've had this growth in the celebrity VC, which I don't know if it's a great thing, because it's always been my philosophy. If you kind of go back to what I was saying about, the two most important people in my development, my parents, and equipping others. I've always felt that the best I can be is Quincy Jones, and I'm trying to find Michael Jackson, right? Or I can be, well, I was going to use Diddy, but he's not a great example. He tried to be in the limelight. But if I could be the good producer, right, and find the artist is the artist, they're the star. So that change has made it kind of people think of VC a lot more. But there are all different levels of investors. And so angels are people typically who have their own wealth. Maybe they've had exits as entrepreneurs, maybe they've succeeded in other industries, and they write early checks into companies. And so you can see that ranging from something like $1,000 to $10,000 to $25K, $100K, if people have it like that. So they're typically not utilizing someone else's funds, right? So they get all the returns. Whereas a venture capitalist actually raises institutional funds from foundations, endowments, pension funds, general fund of funds, and brings that capital together and then invest on behalf of all that pool of capital. And the economics, the way it works is based on a certain hurdle rate of the initial fund. Then when the profits are over hurdle rate, whatever the profits are, they split up to like the VC firm gets 20% of the profits, which is typically carry. And the 80% of the profits goes to the original investors. So it's between kind of like a solo investor with their own money and an institutionalized firm that's investing on behalf of larger pools of capital.
All right. So you specialize in enterprise tech, healthcare tech, and food. So like what criteria do you use to determine what companies to invest in?
Yeah, so at GreatPoint, we invest in those three kind of broad areas. It's kind of funny when we say we specialize in it, because people will say that's a lot to specialize in. But we invest in Series A and Series B companies, and what we look for are first and foremost at that early stage is phenomenal entrepreneurs. So that's either a repeat entrepreneur that's going back into that same industry to disrupt something else, or a first-time entrepreneur who has a unique perspective and has some competitive advantage to get this ambitious goal, right? Also looking for great technology. and how that technology stacks up against the legacy and startup competitors, and just traction. So at pre-seed and seed, you're going to look like that first bucket of team is probably going to be 80 to 90% of the reason why you invest. Whereas for Series A, it goes down to more like 60, 70, yeah, probably 60% of why you invest. And so looking at what they've done since they've gotten capital is really key. So how much revenue have you made? And I could give a number, but like ultimately it's more of an art than a science. Every little different industry is different. And so I don't want to give a blanket number because that wouldn't be true. But we do want to see, especially if you're in enterprise tech, if you've done pilots, have you converted them to SaaS and recurring income with contracts? How have you utilized your capital thus far? How much have you grown year over year? What are your projections going forward? And what are you going to use this capital for, that you're fundraising currently for? So those are a little bit of the things that I look for.
So when a company is pitching, I've now had the opportunity to see a couple of companies pitch, and I can tell as an early kind of stage to this space, pitches that I think are really strong and entrepreneurs that are really strong, and then folks where I probably would not put my own money there. So I'm sure you've seen hundreds, maybe even like thousands of folks now pitch. What are the things that are flags for you, and then what are things that are things you look for when folks are kind of getting in front of investors?
And just to clarify, are you asking if it's a kind of long form pitch where like I'm sitting down and meeting with them, or is it like an initial pitch of like 5 minutes or something like that?
A long form.
Okay. Yeah. That's it. Well, I think the most important thing is I love to see the confidence of founders. And confidence doesn't have to mean arrogance. Those are two different things. But when you've decided to build something that didn't exist before you thought about it, and take the time to learn the specifics of an industry and create value and answer, I fill a gap with a solution that didn't exist before, I want to see that confidence of that you built it. And that passion of why you're continuing to build it, because there's ups and downs of entrepreneurship. Also like to see, sometimes the best pitches I've had in those long form, we don't even really go over the deck. It's more just a conversation in which they've been able to really intrigue me on what this problem is. The problem's big. There's an unmet need in the industry, and given their background and their solution that they've created, they're going to solve it and build a big business from it. And so usually in that trailer of the intro, their background and how their background gave them insight to solving this problem, then we just have questions. And so that's one thing that I really like, when they have an understanding of how to tie in both their passion, their background, and where they're going, their vision. That has me intrigued. So I like that. I think just personally for me, when someone is too robotic and I've seen bad pitches, but for companies I still want to invest in, because they had maybe just not a great pitcher, right? But like if they can build teams around them that can fill their gaps and still sell it, then it's fine. But I've been to some bad ones where people, their narrative wasn't coherent, it wasn't intriguing, and they weren't able to really explain the why their customer would be interested, why the industry needs this. Another red flag is just saying you have no competition, because even status quo is competition.
All right, Ernest, you've laid out a roadmap for me. So now, to start my fund, I just need to find a foundation or an endowment to give me some money. And
yeah,
then
it's super easy.
and then I find a business to invest in. Then I'm a venture capitalist at this point.
That's pretty much it. Yeah. That's the. I was about to use a very old idiom. That's the Reader's Digest. I don't even really know what that means, but I guess the Cliff Notes version, yeah.
So, in one of your blogs about how to ace your venture capitalist interview, you talk about creating a venture capitalist thesis. Can you describe how you would actually construct one of those?
Yeah, I would encourage, because I wrote writing out real time is probably more coherent than what I'll give right now. So I suggest people like check that out, and I'll give you guys that link that you can share. But to build a thesis, you need to essentially build out just like what you're looking for in an entrepreneur. What's the problem of the industry that you're interested in? What are the reasons for these problems, right? So what are some supporting data of why this trend is occurring or this problem is occurring? What has changed in the market that allows for new solutions in this space? And then what types of solutions do you think will succeed? That's basically the kind of format. Now, for extra credit, to actually like show that you know how to do the job after going through that process is actually doing the work. And so seeking out companies that fit those 2 to 4 suggestions that you outlined, and then that's your deal flow. And then now when you're having interviews, it's not, hey, this is what I think you should invest in this space. I actually have 10 companies that you've never met before that do exactly this. And I can introduce you to them yesterday. That speaks volumes, because deal flow is currency in this business, and people want to see people who have the grit and ability, I guess the initiative to really see a thesis through. And because that's going to be your job. You're not going to be given much guidance. You just need to be able to take macro and micro trends and be able to assess how to best utilize your time in finding new companies, helping your current companies grow.
So one of the things that I have thought has been really interesting, especially with like COVID as a background and like violence against the Black community in the US, you're seeing things like SoftBank committed $100 million to invest in diverse entrepreneurs. Andreessen just committed some money to very little bit of money, but you're seeing this shift. So I think it's important to have diverse entrepreneurs access this capital and the resources and the mentorship. But can you talk more on like having diverse folks run funds and go out and fundraise, what that looks like, what hopefully will look like in the future?
So you're saying more fund managers and what it looks like currently for people to raise funds?
I would love, that's I think we need a full ecosystem change.
Yeah. So I think, and this is one reason that I joined as a founding board member of Black BC. What Frederick and Sydney co-founders kind of brought to me, and three other investors as a kind of idea, and we were whiteboarding how we wanted to see our industry. We've really taken a lot of the tactics that we saw from founders we loved, right? So we saw a problem. We got a team together that we felt we had a competitive advantage of solving that problem. And we outlined kind of like how we would do it. And Black VC's goal is to increase the number of investors from the African diaspora. Given that I believe 80% of all funds don't have at least one Black investor. And you know, when it comes to general partners, it might be even less. I don't even know what the percentage is at firms. So there's clearly a problem. And I think a lot of the results that we're seeing, the outcomes or lack of outcomes of investing into diverse founders is because of that. There's clearly an understanding of market when you have people from those communities being able to sit at the other side of the table. And through programming, through partnerships, we're trying to, and knowledge sharing, we're trying to increase the number of investors, more importantly, increase the number of general partners. Now, to the other piece you mentioned about how to raise a fund, this is personally something I haven't done, like about raise my own fund. But talking to friends, it is a hard journey. And hopefully it gets better with understanding. Then it shows the importance of having on the LP side a diverse group of fund-to-fund managers. And so how we do that, I think a lot of things are changing as we kind of speak. But I think programs that not only look to help founders, diverse founders, but also to help increase the number of investors and then also fund investors would be key. I mean, we have a lot of great, I won't even name because I don't want to name, I don't want to leave out one of my friends' firms that is clearly a bright spot in this, but we have leaders who have proven out, you know, being able to raise anywhere from $5 to $100 million funds. And so we need to keep that momentum because there are a lot of other people who want to do that as well. So the same kind of programs we were talking about for funding gaps on for founders at the family, friends and family stage, we need something similar for helping LPs get connected to these emerging fund managers.
So one of the things that I've heard that I've thought has been really interesting, there is now talk about having LPs earmark money for diverse funds, right? Yeah. So it can be Black owned or Black, I guess, founded or Latino founded or diverse founded. And I think that's one way where at least you know that there's this bucket of money. But it's, as I've learned more about the industry in this space, it's the amount of money that is being managed and then deployed is insane. And so like, I think all parts of the ecosystem need to change. I think when you think of investing in founders, that's already at the bottom, right? Like you're not even having conversations on the LP level on like strategy. So it was kind of interesting to hear. I mean, you're seeing things like Backstage Capital, you're seeing Harlem Partners, like you are seeing funds by diverse fund managers pop up. There just needs to be more of it. And like, what are like systematic changes? And maybe it's the earmarking of LP money.
Yeah, I think it's that. It's also, you know, how they process and due diligence is kind of a wait and see as well. They only have a certain amount allocated. This is no excuse, but it's just what I've learned through friends' experiences. They have a certain amount of capital to fund managers, and they also want to see traction. And sometimes that's like for a long time. And so um, there probably need to be changes for that because I know there are first time funds, but from people who have started or who have been GPs at more established funds that don't have the same experience or trouble. So I think that needs to change, as well as we've had a lot of success from our diverse fund managers of being able to raise um, smaller funds for like seed and pre-seed. But for the number of us who are in venture, not all of us have focused always on seed and pre-seed. And so seeing, it'd be good to see people who are trained in more A, B, or growth be able to actually raise a growth fund instead of kind of, if you're told that you're going to raise $50 million, then you can't do a growth fund. That means you would do 2 deals or something. So there needs to be something that changes about that too. And hopefully we can get some momentum based on all that's going on.
All right, taking it back a step. My background is engineering. What exactly is an LP? There may be some listeners out here that may not be, up to date on private equity and other types of funding.
Yeah. Sorry. And just call me out if I use too much jargon. It's called limited partner. And so essentially what that is when you invest in a venture capital fund, you're investing in what is called a general partner management company. And so they oversee this pool of capital. And so all the investors in that pool of capital are called limited partners, so LPs. And LPs, as far as like, that's just a title as being a part of an investment vehicle. But who those folks are, they can be high net worth individuals and family offices, or like I mentioned, endowments. They can be foundations, because foundations don't deploy all their capital to their cause. They also invest some of their capital that they raise as donations. And then maybe corporates that have some capital to do that. So that's, hopefully that clears up what an LP. And don't worry, it's no dumb questions. I didn't really know what an LP was until after business school. So.
Gotcha. So I have another question for you. So I'm curious to see, like, what was your impetus or what prompted you to be a founding member for Black VCs?
Well, first of all, I think that, even despite all of the negative characteristics, and those are like not just characteristics, like some people are like that in the industry. I really felt that a lot, based on my skills, personality, and values, that venture really aligned with it. So like I spoke about, like, it's about like literally giving someone resources and letting to see if they grow, right? It's similar to kind of like the parable about the talents, right? Give everybody like 1 or 2 talents and seeing if people can actually grow those. And so when I was able to see from my going through the experience of starting that company and then getting exposed to it in business school, I felt that was just a great fit for me, venture capital. And so given I felt it was a good fit for me, I was like, I have a lot of other friends that come from my communities, come from my background, would be good fits. And I believe everybody knows the statistics of how there'll be a minority majority. There'll be, in that society, there'll be different problems that need to be solved than now. There'll be different consumer preferences. There'll be different businesses. And to take advantage of that as an investor, right, it'd probably be advantageous for us to have more individuals that reflect and understand those markets and like those emerging communities. So that's one reason I wanted to join. not to mention, I believe that we can, in a small way, really influence some strong economic impact. Um, because we just don't all live in our communities. We just don't all live in the Bay Area. We just don't all live in New York. We don't, there are other places we live in, and there'll be solutions that need to be solved for all.
So, Ernest, is there anything that you'd like to add that we didn't ask during this conversation?
Man, kind of stumped me. No, I think the questions are great. I think that I would just push everybody to, especially when it comes to entrepreneurs, and I believe that's going to be kind of you guys' main audience, right? Is to they can reach out to me for help. And I like to, in my old blog, I used to have a section that was called VC Whisperers. So like, if I can help in like the guidance of just like, what does that actually mean? I'm willing to do that. And so you guys can share my info on that. But also it's just think about, when you think about VCs love investing in the immigrant entrepreneur, and the grit that they've been able to create something, and hardworking. That motif or characterization is very like similar to the American minority, right? Being able to build from very small resources, being able to really finesse any situation, quickly learn, adapt. That's what I want to see in founders. So understanding that, there's definitely something lost in translation, that they don't see they don't all see that yet. But I want to just share that to your audience, because that can be something, a core confidence for them, knowing that they are powerful, they are have the great potential, and any VC will be lucky enough to invest in their company. So entering with that, I think is key for any meeting. The other thing I tell people is just like, whatever your like pump up music is, or if you need to hire Jerome, I don't know, like have that person, have that hype music, a hype man or hype woman before you go into your meeting, because you have nothing to be intimidated by.
So I was having a conversation this morning actually with my therapist about this, right? Because I like don't come from a ton of privilege, but I have a lot of privilege now.
Yeah.
And I was telling her, one of the things that I like fear is just like losing sight of myself, and like just being overwhelmed by like all of this privilege that I'm always going to be around. And she kind of talked about, especially in minority communities and communities of color, like our currency is different, right? Like we have always been communities that are like focused on families and friends and building relationships. And that in itself is so rich and powerful. And then it's also like such a translatable skill when you think of these like spaces in business and government, like relationships are key to anything. And she said something like, you already have it in you. Great. Just remembering that before you step into meetings and in spaces of power, like you have that richness in you. And I was
Absolutely.
like, that was like a good way to hype myself when I don't have when I don't have Jerome. that is kind of the way I was thinking about it.
I like that. That's true.
Where can folks find you? Can you share your email, Instagram, Twitter, any of that?
Yeah, so you can find me at my email is Ernest, Earnest, at gpv.com. That's GaryPaulVictor.com. My Twitter is just Ernest Sweat. And yeah, people can reach out to me. I would say also aspiring venture capitalists, check out my Medium blog. It's called The Importance of Reading Ernest. And there are a lot of resources on there that I really codified while I was going through the experience of trying to break into venture capital.
That wraps up this episode of the Disruptive Podcast by Minority Innovation Weekend. If you haven't already done so, please subscribe. Check us out online at www.minorityinnovationweekend.org and connect with us on Facebook, Instagram, Twitter, and LinkedIn. MIW 2020 is coming up on Saturday, October 3rd to the 4th, so head on over to www.minorityinnovationweekend.org and register for MIW 2020 today.